Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex.
Chicago soybeans. 9 weeks ago, I highlighted a bright pink July 24 to date rectangle pattern, currently 953 to 1095. The top side for this pattern is also capped by the nearby 50% Fibonacci line, the May to August 24 move at 1098, and the 61.8% absolute Fibonacci line at 1106. The market has over the last few weeks stabilized over the November 2020 low at 1045, but yesterday and again today prices have dipped below it. Further down we have most of the moving averages tightly packed in between approximately 1021 to 1033, plus the congestion further down, which I had previously pointed out, mainly between mid-October 24 to mid-January 25, all in the 990 zone. Meanwhile, topside we have the extension to the small late October to November 24 based head and shoulders top, currently at 1076, which is rapidly disappearing upwards. And I have some strong doubts about the value of this one anyway. So all in all, I still keep emphasizing how we are within a large July 24 to date rectangle pattern. Admittedly a very large pattern, but one I think which is the core pattern to watch here. The only new feature of note is that we have had a larger range in April than in March, and thus we have ended up with a monthly key reversal up for April. Chicago soybean meal. The main recent pattern driver here in this market had been, and still is, just about, the dark blue May to October 24 bearish shift pitchfork. The market has been running since mid-April over and along the upper tine, currently at 296.20, something I've seen happen with pitchfork patterns in other markets. Despite the extended stay over the upper tine, it still in essence is, I regard this as a breach rather than a break higher for now. 5 weeks ago I linked the recent highs into a bright red downtrend, currently at 303.30, which ties in nicely with the descending gold long moving average, which is currently at 307.90, that is still just about shadowing this downtrend, just above. Plus earlier attempts up over the green short medium moving average, currently at 301.30, and the mauve medium moving average, currently at 303.40, have seemingly failed for now. This all continues to fuel my thoughts from 5 weeks ago as to whether the whole action this year is developing into a type of descending triangle pattern with the bright red downtrend topside and the 290 zone below as a base of it. We are well within this triangle right now, so no targets as yet, but this only suffices to remind me to warn you about possible false breaks here out of this proposed descending triangle pattern. There is also the possibility of it all being a descending wedge pattern. The purple lower trend line, currently at 287.90, but we'll know better the closer we get to 290 even. In the meantime, we still have the previously highlighted late December 24 to mid-February 25 small bull channel that became a combined ascending wedge pattern and head and shoulders top. Primary targets below for both patterns were reached, but it still left open and live the ascending wedge pattern's secondary harder to reach target X1 down in the 265.60 zone, plus an interim target X4 in the 285.30 zone below. But head and shoulders top pattern's secondary target will have a harder to reach target X3 down in the 280.10 zone. These secondary and interim targets below have been much harder to reach, and I was and I still am ready to retire them, but for now they still look good. I should also point out that we are today within the previously highlighted 282 even to 300 congestion dating from between April to August 2020 and reprised back in August and November and December last year. Finally, this commentary would not be complete without my discussing the elephant in the room, or at least the elephant in the room which was stayed there throughout 2024 and also resonates now into 2025, and that is the annual key reversal seen here at the end of 2023. I said, and I'm afraid I have to repeat something I have highlighted now for 99 weeks, so coming up for nearly 2 years, and I quote, "I not only need to remind you once again of my words when I pointed out that Chicago soybean meal was about to make that rarest of patterns an annual key reversal down. This duly came about at the end of 2023 and I've been living in the shadow of this pattern ever since. End of quote. I've also added ever since, and I quote, "There is only one thing you take away from any of my musings, let it have been those words." End of quote. These last few weeks have shown that the shadow cast by that supremely significant pattern so long ago still darkens the skyline of this market. Chicago soybean oil. A continuing theme as per the last 8 weeks now of a somewhat clearer chart when compared to earlier weeks. The main pattern here is still the brilliant looking bright red shallow bullish shift pitchfork with a mid-September to late December 24 move. The market is right now in between the bright red middle tine below, currently at 46 even, and the bright red upper tine above, currently at 51.11. Okay, so recently with changeover we saw a small gap higher 3 weeks ago, followed by a further move higher, being part of a small reverse head and shoulders bottom formed during March. Prices moved up over the congestion at 42.52 and 42.67, being the May and April 24 lows respectively. They're more rapidly up through the flatlining long moving average, currently at 43.71, over the rising medium moving average, currently 44.75, the significant 50% absolute Fibonacci line at 43.80, and the April 2014 high, as well as over the May 23 low at 44.68, and the 2014 high itself at 45.04. Prices then accelerated 5 weeks ago over the short medium moving average, currently at 45.73, and the bright red middle tine, peaking at the significant 38.2% Fibonacci line of the March 20 to April 22 move at 48.95, before dropping down 5 weeks ago, piercing but not closing under green short medium moving average and the May 23 low, finally stopping and turning back up away from testing the other moving average and the 50% absolute Fibonacci line below at 43.80, going back to the 38.2% Fibonacci line at 48.95. This resistance was significant because it capped the previous 2 major rises in July and November 2024, and I suppose also the almost rise seen in February this year. Last week the market breached it on the upside, rising up to the bright red upper tine. Gotta love that Andrew's shift pitchfork, you gotta love that one. Up to that upper tine, peaking and then falling away from it, below the significant 38.2% Fibonacci line at 48.95, but not as yet closing below it. It's important that. One should treat this 38.2% Fibonacci line, as I've said previously, with due care and deference. Though having said 3 weeks ago, and I quote, "It wouldn't surprise me to see some buy stops situated some short distance above this 38.2% Fibonacci line," end of quote, and finding out that turned out to be true, I'm nevertheless somewhat surprised that we haven't really triggered any sell stops underneath it. Maybe they are delayed sell stops. We shall see. Now, as I've pointed out extensively in my previous video commentaries, the market seemingly decided upon a huge, large-scale June 24 to February 25 triple top pattern that was extended to a June 24 to April 25 triple top pattern, offsetting what could have been a huge June 24 to February 25 double bottom, or even a huge June 24 to March 25 triple bottom. However, this very recent attempt higher may be upsetting and offsetting that offsetting balance we had between those two. We shall see, but for now we still have this bright red shallow bullish shift pitchfork as the showrunner here, at least for now.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.